What opportunities we have here going into our afternoon and then into the second half of the week. We're starting off here inside of DXY, and the dollar has revisited this front run of support. Now, there's two different ways that you could look at this dollar long setup. One is that it's just a next measured move in a series drawn from Friday's lows to highs, and that explains the support level perfectly. We were also considering that it was part of a full retracement long from lows or halfway back that was front run at a 38.2% line. And both of those are valid. The larger pullback is the line in the sand, the 99.310. When you start zooming out into the longer term time frame, you'll notice this big consolidation. We're looking at a weekly chart here. You see this big consolidation that you have. And breaking out of the highs of the year would be a huge development. The reason for that is because we have a negative correlation inside of our relationship with the currencies, and it's starting to become the dominant relationship on the 15-day. Now, you'll notice that these negative correlations haven't moved over into the 30-day time frame yet. There's still a little bit of a positive correlation on the 30-day time frame. But the rest of our markets are deeply, deeply negative, as you can see here. Even crude oil is getting a negative correlation on the 30-day time frame. And what that would translate into, if we were to break out of these previous highs, would be a massive sell-off inside of those negative correlations. You start zooming out a little bit further, and you can see how much bigger that actually could be as we're moving forward into the end of the year. Now, the reason that this is an important event to be aware of is because right around every fourth year, there's 3 years of dollar weakness, 1 year of dollar strength, 3 years of dollar weakness, 1 year of dollar strength. You'll also associate these with the crypto winters. It's just that the rest of our markets aren't necessarily as sensitive to a dollar strength trade as the cryptocurrencies are. All these little white ovals are the beginning of a dollar strength trade. And it comes out of the beginning of the fourth quarter of that third year going into the fourth. So the beginning of the fourth quarter of that end of the third year is where the dollar strength trade happens. And that's 08. That's 11. It's the end of 2000 going into 2014. It's 2017. It's going into the beginning of 2022. It's going into the beginning or the beginning of 2026. And so we're leading up into kind of the climax of that, in my opinion, going into the end of this year. This is where all of the biggest drawdowns in history for risk assets. This is where they come from. So it is a big deal. We've been stocking this since January. In cryptocurrency terms, 3 days after the top of the market, we were doing the crypto winter webinar, analyzing where the cryptocurrencies would be by the time we got into the end of 2026. I think that has gone pretty well so far. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.